What's going on, guys? It's your boy Stock Scrubby here, back again with another video. Today's stocks went up, stocks went down. We're going to talk about all the important news and all that good stuff. Keep in mind, I'm just sharing my opinion about stock news. It's not necessarily advice because I'm talking over gameplay, all right? But without further ado, let's get into it. This is entertainment.
Get quiet now, lay low when you reach zone, pipe down, make an out, stack the bread.
Alright, so first things first, for those of you that are massive fans of the metaverse, I have some bad news that might slow down how fast your digital land's gonna raise in price. Apple may delay its virtual reality headset until next year, report says. Alright, so obviously the biggest company in the world getting involved in the VR, digital reality space probably would have been a pretty good thing for the metaverse overall. I think Facebook changing their name helped a bit. If you have the biggest company getting on the train, things tend to do pretty well. That being said, it probably is being delayed simply due to how hard it is to get your hands on any electronics right now. Like, I'm not an expert, I know Apple's got a lot of money. That being said, in terms of what they're going to be using, the chips they are able to get right now, I'm sure iPhone comes above virtual reality headset. Like I said, I'm not an expert. I'm just assuming that it might be a situation where the supply chain constraints just don't really work with making a brand new product right now. And even then, the delay that they're talking about isn't incredibly long. From what I was able to gather, it's basically saying that it's going to be released late 2022, early 2023, so just a year, which in the grand scheme of things, considering all the supply problems we got going on right now, is not that bad. The one thing that I will say about VR and the metaverse, once again, my opinion, is that I feel like we've got to have a couple more, iconic VR games, Beat Saber's cool, that one where you get to sword fight is cool, don't get it wrong, but I just feel like they haven't had, the standout banger breakaway viral hit yet. And I feel like once that happens, we're going to see VR gaming become a lot more prominent. As it currently stands, personally, I just don't feel like wearing a headset to play a video game because none of them are worth wearing a headset to play, in my opinion. Our next story, a little bit more general. Dow falls more than 300 points as bank stocks struggle after earnings, and JP Morgan slides 6%. Now, JP Morgan are the people that own Chase Bank, and JP Morgan Investment and Private Bank. They're the biggest bank in the United States, and obviously, if they're having themselves a bad time, the sector kinda follows them. So that's going to be dragging down the Dow quite a bit. As to why the stock for JPM is down 6% in a day, definitely not anything you want to hear from a company you're invested in. Their CFO, or Chief Financial Officer, came out and said that although they had a good quarter, people should expect them to miss their profit targets for the next 2 years. Now, obviously, in an ideal world, they don't miss the profit targets, but generally, CFOs, CEOs only start saying we might not hit their targets if they're pretty confident it's not going to happen. Because obviously, once you say your profit targets aren't going to be hit, your stock tends to tumble a crap ton, maybe 6% in a day. So I don't really know what's going on at JP Morgan. I don't know what's going on at Chase, but yeah, whatever it is, it's not too great because anytime they say they're not hitting profit targets for the next 2 years, something's going on. They did have a good quarter, but like I said, it tends to be when JP Morgan's having problems, people assume the rest of the banks are also going to be having similar problems just because of how similar the industry is. And if the biggest bank with the most volumes having trouble, then technically and usually people assume the smaller ones would be. Whether or not that's the case remains to be seen. Hopefully they can manage to turn it around because, it would really suck if they fell off a cliff. The only other thing that I can see that's really dragging down the Dow right now, at least a little bit, Disney is getting slaughtered. Not surprising considering so much of their revenue comes from parks, and it looks like we might be getting another shutdown. And Home Depot's also incredibly down, a little bit surprising. All in all, though, when the index is going to drop off a cliff like it kind of did today, usually a lot of stocks follow shortly after. Moving from the markets over to real estate, some not good news if you're hoping that housing prices are going to be coming down in the short term. U.S. home sale tumble most in 18 months with listings scarce. Now, I know you're probably thinking you would think that sales tumbling tends to be a good thing for the prices, and usually you'd be right. It just so happens that sales are tumbling because there's not enough houses to match the demand. Basically, home sales are down 11%, but listings are down 19%, and there's still a crap ton of demand from a year ago. And obviously, it's just some basic economics. If you have a lot of people willing to pay more for a house and really wanting a house, but there's less houses on the market, the price tends to move upward. Truthfully, what we really need if we want housing prices to come back down at all is a surplus of inventory. That's really the only way to ease the demand we got. And it just sucks because home builders, for a while after the Great Recession in 2008, couldn't really build as many homes as they needed to because the demand wasn't there. So now we're in a situation where we just literally have a lack of supply compared to how many people want to buy a house. And as much as I would love to sit here and be like, oh, no, don't worry, everything's gonna come down, I don't know, man. There's very few things I've ever seen where the supply is low, demand is high, and prices come down. I think eventually, hopefully, home builders will be able to get enough, like, a backlog of inventory. It should alleviate it a little bit. But yeah, until we start to be to a point where listings are growing and sales are going down, I don't feel like it's really a good sign for the housing market and where it's going at all. Unless you already own a house, in which case, yeah, your house is going to keep going up in value, I think. Hopefully, I'm not a financial advisor. I'm just speculating based on some the basic levels of economic understanding about supply and demand here. Bouncing on over from housing to crypto and states, I guess. I don't know, weird combination. Arkansas is offering remote tech workers $10,000 in Bitcoin to move there. All right, so before I talk about this, I want to make it clear, no offense to anyone who lives in Arkansas, but I feel like this is a good idea to them, or for them, because there's no way a high-paid tech worker was ever picking to move there. Let's just be honest here. There's some states that, like, if you were making $500,000 a year, would you want to live in Arkansas if you had the choice? Obviously, though, you change things up a little bit. You get them moving to Arkansas when they're young tech workers, give them $10,000 in Bitcoin. By the time they're there earning a bigger salary, they've built a life there, a lot less likely to leave. And on top of that, Arkansas doesn't really strike me as a tech hub, but if you start having tech workers there, relocating there, startups are naturally going to be becoming like more and more common there, which boosts your economy up. Because I mean, think about it. How many great tech workers live in Arkansas right now? I don't know. Would there be a lot more if they're giving away $10,000 to move there? I mean, hopefully. So you would think that part of the economy would start to grow. And on top of that, before people are like, LMAO, $10,000 to move, you got to remember, you are moving to Arkansas, which if you look at where most tech jobs are now, Miami, California, New York, those type of vibes, $10,000 goes quite a bit farther in Arkansas than any of those markets. So listen, quality of life wise, making $120,000 a year in Arkansas, you're living like a king, dude. You got a fat house, you got a pool, everything's great. $120,000 a year in New York, you might not have cockroaches in your 2-square-foot apartment, but you might. It just kind of depends on your luck of the draw. I do think overall states should start looking more into this. Now that people don't really have to be in a central location, it can make more sense for people to move to cheaper states to technically make more money with their purchasing power. And I think incentivizing tech workers to come there when they're young, interested in crypto, could do quite a bit to boost the economy eventually once they get to the point where they're making companies and whatnot. So I don't know, I thought this was a pretty cool idea. I don't know who's paying for it. Obviously, I don't necessarily want, if I live in Arkansas, my tax money that was supposed to go to schools paying for Bitcoin for tech bros, but I don't know. Could be interesting to see how this all works out. And our last story, kind of related to crypto, but in a way funnier way. NFT investors owe billions in taxes as US officials crack down. So I knew this was coming, For those of you that don't know, I know a lot of people have been bragging about how they're printing money on NFTs and da-da-da-da-da. And listen, I bet you a lot of them are. I don't doubt that. The marketplace is worth like $40 billion now. A lot of people made a lot of cash. That being said, sometimes people, when they start making a ton of money out of nowhere and have never really made a couple $1 million flipping NFTs, they forget that a huge portion of that is gonna have to go to taxes. The IRS, the government, always is gonna get its money. And to put things in perspective, let's say you went out there, you made $1 million buying and selling NFTs this year, you were flying. Well, the only problem with that is that puts you in the highest tax bracket, which means the IRS is expecting 37% of that $1 million. So if you went out and you spent the $1 million you just made, you're going to have yourself a bad time when you get a bill from the government for $370,000. Obviously, I'm assuming a lot of people involved in the NFT marketplace are aware of how these taxes work, but for sure there's at least one guy out there that's just been like flipping Bored Apes, not realizing every time he buys and sells, he's going to owe short-term gains if he switches NFTs. So overall, it'll be interesting to see how a lot of this goes down. The IRS has a ton of experience trying to figure out people's gains from stocks, real estate, all that, and they still mess up. The one thing that I think's on crypto's people's side is this really isn't well understood by the IRS. That being said, definitely pay your taxes. If there's one person you don't want to owe any money to, it's the federal government, because they tend to not play when it comes to collecting on their debts. But yeah, all you crypto guys out there, I know decentralization is the future, but because you still got to pay your taxes, even if you make $1 million on the blockchain, bro. 370 grand's got to go to the feds. Anyways, guys, that's going to do it for all the main stories. If you're wondering how the overall market's doing today, there's still some time to close, so, I might change. Dow down about 0.8%, S&P down 0.25%, NASDAQ up 0.14, excuse me, and the Russell 2000 down about 0.65%. All in all, really choppy week. Not the best week I could have ever asked for when it comes to the stock market news, I can't lie. But hey, that's the way the ball bounces sometimes, Stocks go up, stocks go down. We're all familiar with that concept. And that being said, I think that's going to do it for the video. Hopefully you enjoyed. If you did, I would really appreciate you taking a second to press that like button. Let me know in the comment section down below what you thought, and subscribe if you're new. If you do like these finance videos, please comment. It really helps in the algorithm, and these videos are just getting absolutely slapped by YouTube, and not in a good way, not in a fun way. So if you wouldn't mind commenting, I would appreciate it. I'm not going to stop making them, but if they got more views, I wouldn't complain. Beyond that, if you want to check out the intro song link down below, along with the link to my podcast, The Scuffed Cast, or you could use code SCRUBBY at the G Fuel checkout. Great way to get a discount on G Fuel. Help yourself out at the same time. And that last link down in the description is going to be a link to my merch store. So if you haven't gotten yourself a t-shirt yet, feel free to go do it. It's the coolest merch to ever exist. On that note, that's everything I've got to plug. Don't get anyone pregnant. If you do, make sure they're hot, and hopefully I'll see you guys next time. I'm out. Peace.